The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 9th edition of the Fantastic Friday Trader's Edge Show. I'm your host, Steve Rhodes, out there. Healing process. I should be back, hopefully back up towards 100% come this Monday, but we will manage to make it through the show today, and I would love to hear from you. In one of many ways, you can always give us a call at 877-927-6648. If you can't call in, you can always send me an email like Michael did here earlier. And, we're going to take a look at his question, so I'd like to take a look at yours as well. You just send that email to steve@tfnn.com. Do it sooner than later. And inside the subject box, if you just put radio show question, that'll just make it easier for me to be able to spot and pick out amongst the many emails that I seem to get about every second of the day out there. Of course, inside the Tiger's Den, you can send me a instant message, private or otherwise. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. We've got the Dow trading up 356 points. That's about 1.5%. S&P's up 36, 1.3%. NASDAQ up 1.5%. That's up 102 points. She's trading out at 70.69. You've got, so all the indices are in the green to the upside. Spot volatility index, we talked about this yesterday. Once it closed down below its 50-day exponential moving average, which it did yesterday, we said be careful for that rip your face off rally, because there's a lot of plop, plop, fizz, fizz, oh, what a relief it is, that the spot volatility index needs to do to move down towards its lower Bollinger Band. So it's trading out at 1523. It's heading into the 9s area out there. So that looks good for the S&P 500. Gold's up a couple bucks. Silver's up 11 pennies. Light sweet crude, a nice move, 2 and 6/10%, up $1.56 out there. Leading the charge dollar-wise, the upside, you've got Booking Holdings up 24 bucks. Google's up 22. Amazon's up 17. Mercado Libre 17. BlackRock is up 17. That's 3% to the upside. To the downside, it is Fizz, by the way. National Beverage, that's down nearly $9. Well, not nearly. Over $9, 9.5% to the downside. Volume there about 711,000 shares. Big Lots is down 9 million shares. 584 is what it's down. That's nearly 11%. Sunniest Pharmaceuticals off 40%. Hasbro down 3. So there's plenty to look at. Of course, I want to look at what you want to look at. And that means we're going to start with yesterday's email. Came in late in the day, and this was from Mike in Portland. And Mike wanted to take a look at Micron. MU is the ticker symbol. Mike, let's go ahead and put this up. Mike is in at 44. And his first question was, where are the profiles? And he wants to be able to add to the long side. So he's got about $10 in profit inside of this equity. If we take a look at the daily chart, albeit today is a looks like a bearish reversal candle, bearish engulfing, and a key reversal, because yesterday's high and low has been exceeded, and as long as this trades to the downside, you would have that bearish reversal signal. The issue is, though, I don't have any type of completed pattern with regard to today's session out here. So to me, if I take a look at this longer term, when I say longer term, I'm only looking at the daily chart out here. So, whoops, I got to do this correctly. And what I'm going to do is type in the clear A to B equals CD pattern that is inside of Micron Technologies. And that's going to give you a price projection, minimum price projection of 60.56. This would be one of the reasons that Mike in Portland would be looking to be able to add to this position. More likely than not, this is head up to 66.83. So we know what its longer term view is, and we can say that with confidence, if there is such a thing, because the November 22nd swing point that had 28 million shares was passed with accelerated volume wide price spread. That was 70 million shares on March the 5th to the upside. So, yes, you got a bearish reversal candle today. What does it mean? Well, first of all, with regard to your question about profiles, you're up above the daily, the weekly, and the monthly out here, and they're down quite a ways. $46 to the top of the daily box out there. $43 in the weekly, $36 in the monthly. So that's really not an issue for you. If we take a look at Micron over here, now you've also got a confirmed A to B equals CD to the upside on a weekly basis, I believe. So the volume there was 105 million. And this week you're doing 300 million. So, so this week you're confirming. So you've got a confirmed A to B equals CD inside of Micron Technology in a daily and a weekly time frame. So with regard to where could this pull back to? I just would put up my daily chart out here. This is going to have a number of different tools, indicators. One of those being the green and red boxes. So that's got your Rhodes momentum tools. That tells you that that there's nothing but buyers inside this, because we see the three red boxes that have formed here since that nice hammer candle back in the early February area. Where would you buy this? 51.38 on a pullback. Maybe you're going to get that. Maybe that's the meaning of today's candle session out here. That would be Stevie's red line. That is what I would be looking at as a support level. So you're at 54.12. So if that were to unfold, that number is going to change as the days go on. But I'd be looking at Stevie's red line as a place for you to go ahead and add to your position out there. Presently, that's at about 51.38. Mike also wanted us to go ahead and take a look at Intel. So let's just put up Intel, see what it is doing inside of this sector out here. And that, too, has a bit of, well, let's do this. Let's go see if there's any confirmed A to B equals CD patterns inside of Intel. And then what we probably ought to do, just for blanks and giggles, is to go take a look at the entire sector, right? Because it's so important to get the sector right. In the case of Intel, the nice thing about it, I believe, I take that back. So the swing point inside of Intel is January 29th, weekly, that we're looking at. And that had volume of 178 million. Doesn't look like you're going to get that volume, even though you're up and over the high of that at 50.85. So you don't have really a confirmed A to B equals CD to the upside on the weekly chart inside of Intel. In the daily time frame, what can I see out here? What can I easily see out here? Well, what can I say? I'm going to pass on this chart. By the way, profiles there, 50.90. You're above that. That is the daily top of the box. 47.30 is the weekly top, and 35.03 for you is the top of the box. And I know you're not in a trade. You're looking to get in a trade here. And so where would that be? Where would that be? I'd say stick with the Micron trade at this stage out here. We've looked at a couple of different equities inside this sector. Garo had called a couple days ago. Let's go see how that one is doing. On is the ON is the ticker symbol, and there we were taking a look at a confirmed A to B equals CD as well. Now today this is showing that it's made a higher high. It's also got the bearish engulfing candle that has formed. Again, doesn't mean that the move is over inside of this equity. Could easily pull back and test Stevie's red line at 25.13. Although maybe I didn't have the right candle session. It looks like it's not really a bearish candle today at all. On headed to the upside. Mu headed to the upside. Hey, that semiconductor sector, you're talking about breakout fever. Steve Rhodes with TFNN. We'll be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timer's Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so, we were taking a look at a couple of individual stocks inside of the semiconductor sector. And if you're watching us on TigerTV right now, what you see is the actual semiconductor sector itself. You look at the monthly time frame chart here. And although we're into the early part of the month here, at this stage, what we can report to you as of March 8th is there is a breakout party going on in the entire sector. Now, this is quite a breakout because this is a long-term consolidation. This is a chart that goes back and takes a look at the consolidation high from March of 2000. That was at 1362. We're right now trading out at 1427. So should the month of March trade above, close above 1362, the higher the better. What this does is this gives you a long-term price projection equal to or greater than about 2,500. So that's nearly 900 points more to the upside over time. And the semiconductors will do that at the same time. What we've got going on is the NASDAQ 100 on its way to 8,800, give or take, and that too is a price projection that is equal to or greater. Now, it broke out of as a consolidation back in 2016 out here, 7074 right now at new all-time highs, and everything is looking good. Everything is looking very good inside the NDX 100. With regard to the general market, then I'll go back to questions out here. With regard to the general market, let's come back, or general markets, I suppose I should say. If we take a look at the summation index or the advanced decline oscillator readings for the New York Stock Exchange, NASDAQ Composite, and the Dow, the important thing here is the Dow has finally joined the other two and is now above its zero line. That's the bottom panel. It says 0.57 right now. So that is bearish. That suggests that at a minimum, the Dow is headed to its downtrend line. That is chart number 3 on my screen out here. We can see the New York Stock Exchange is broken its downtrend channel today by gapping up, and it's trading up near its highs. And it's at the 145.53 level. Now, that's really important. Here's where a really important message is going to come, both either bullish or bearish, inside the New York Stock Exchange. I don't know that it happens today. It can happen today. Well, let me make sure. Let me go see what the advanced decline information here looks like. What do we have as far as net advancing issues? Yeah, it actually could happen today because your net advancing issues is only 2,089. Now, look, folks, that's pretty darn bullish. That's net advancing. That's advancing issues. Net advancing is only 1,274. So there's lots of more room to the upside that we could see as far as market breadth inside of the New York Stock Exchange. The reason that we're going to pay attention to, if there's going to be a failure, it'll typically happen at the 150 or just underneath the 150 level inside the advanced decline oscillator reading. When that advanced decline oscillator reading gets up above 150, we don't know if it will, but if it does, the message is clear. The message is you're going to see higher prices. Doesn't mean on Monday or the day after you get that. It just means you're going to see higher prices. So for those of you that were looking for the markets to, and you will, when I say higher prices, it says the New York Stock Exchange will go on and make new all-time highs as well. So just want to make sure that we're clear on what Stevie is communicating to you via what the charts are communicating to me. And really, therefore, communicating to you. So you'll want to watch that level because that'll give you a big piece of news out here. We talked about the spot volatility index. It's not anywhere near its lows. It doesn't have to be. It just needs to be below the 50-day exponential moving average. It closed there yesterday. You have a bit of follow through today. By the way, that moving average on is 1708. You're trading right now at 1521. 967 becomes the price target. That price target will change over the coming days. The point is there's a lot of room to the downside inside that spot volatility index, and that's where those rip your face off rallies will come from. We can see the New York Stock Exchange, the NASDAQ composite, I should say, is up above its highs of 75.0577. Of course, we knew days ago as the NDX was headed up towards its highs that that there's no way. When I say no way that the markets were making any kind of major top out there. Hey, how about that? I got that vigor back inside the voice. That's not how markets make their tops. You don't go back and retest and retest and retest. You just simply, it doesn't give you a chance to get out. You have retracements up towards those highs, but it does not give you, and let's face it, the NASDAQ is breaking out. It's a breakout party. The semiconductors, those things have broken out as well, as you and I have taken a look at. And now we can see, look, let's watch to see what the reading is as far as the advanced decline oscillator line inside of the New York Stock Exchange. Now, another great tool out here that you have been watching for the last couple of weeks out here has been the S&P 500 and its market breadth. And what we have going on right now is you have a nice bullish crossover. Now, by the way, this chart that you're looking at takes back to 2014. And you will see if you were to go back to 2014 and track each of these crossovers, bullish or bearish, you'd be well ahead of the game out here if you just simply use this as a set of signals. Now, what we've seen here is this little accordion. It's a little accordion pattern. Stevie just made that up, by the way. It's not a. I don't think you can Google accordion pattern, but maybe you can. And if it's gone, if no one's used accordion pattern, let's go ahead and get the. Let's go ahead and get the. Get the .com on it. And but the accordion pattern basically is where we've seen a number of crisscrosses, both bullish and bearish with regard to its market breadth, saying, hey, with regard to the S&P 500, could be consolidation. That's going to widespread, by the way, if you go back to the highs from several weeks ago to the lows. That's a possibility. But in this case here, and we saw that back in 2015, by the way, you saw a version of and you're going to say, how can you have versions? Well, you can. Version 2.0. You had version 1.0 of the accordion pattern back in 2015 out there, but you're never sure when that last signal is going to free it up and the accordion is going to get free. At this stage here, it is a bullish signal with regard to the S&P 500 on all of its time frames, whether it's weekly, whether it's daily. you know, whether it's a 4-hour chart, whether it's a 60-minute chart out here. So very bullish with regard to the S&P 500 out here. So we'll close out that chart. We know that we were bullish on the NASDAQ 100. We've known that until we're blue in the face out here. We're no longer blue in the face. If we take a look at the ETFs now, this chart that you're looking at shows you each of the sectors, each of the 10 sectors inside of the S&P 500. Although this just has the 8, 2, 4, 6, 8, 9. This just has the 9. Got to talk to John about that. But if we take a look at technology sector, healthcare sector, financial sector, XLB materials sector, industrial sector, all of those are in full-out blown bullish formation from a market breadth standpoint. The consumer staples still hasn't had a bullish crossover on the weekly. The discretionary still hasn't had the bullish crossover on the weekly. Utilities hasn't had a bullish crossover on the weekly. Energy sector has not had a bullish cross on the weekly. But if you tally up the percentage that the technology, healthcare, financials, materials, industrials make, hey, it's why you're seeing the crossover on just the S&P 500 on a weekly basis. Steve Rhodes with TFNN. We get back, we'll go take a look at what you've written in for or what you've requested in the Tiger's Den.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. By the way, if you take a look at the real long-term chart for the S&P 500, when I say real long-term chart, we're taking a look at the quarterly chart. What this will do is provide you with a price target of where this is headed to, which is 32.78. Now, the reality is that's not its official price target. It's more like 36.77 to 41.85 out there when we take a look at the A to B equals CD. And what this chart here is actually telling you is that even coming off of that nice low from January 2009 up to a high into April 2015, that was a heck of a move, 666 to 2134. Pretty strong move, but the move since the January 2016 timeframe has been even stronger. Even stronger. That's why I say 36.77 to 41.85 over the long haul is where the S&P 500 is headed to. We had a request to take a look at gold and take a look at the yen. So if we look at gold, here's basically what we know about it. And that is, and it's most important, to really just focus your eyes on the daily and the weekly charts. Those are the two panels, on your right-hand side. And what we know is that both of those had market profiles that had a bullish structure. That means the center of the line was closer to the bottom of the box. That says that the lows of those time frames should be strong support. Well, they have both been tested this week. We saw price move from a high of 13.39. Remember, this new profile formed on Sunday night. And Sunday night said, okay, price is probably going to make its way up to 13.39. Did it do that? It did that. It got up there and then went back and tested the bottom of the profile. Did that this morning. Look, it got below 13.1540. That's not the point. We use these guidelines. That level held. You're trading above it right now at 13.23. The weekly box was 13.19. They both held. That's a positive or short-term positive from a gold standpoint. More likely than not, gold's headed back towards that 13.39 level. No idea if it's going to be able to break it out or not, but that's what the chart for gold says. However, it may take a little time to do that because right now the pattern that's really in play, and there's a couple of them, there's a descending price channel. You can see that if you're watching this on TigerTV. But what gold really has to do, and why 13.39 is one of its issues, 13.2840 is really the next one. Now, ideally, what takes place with regard to gold over the coming days is we don't see price get above 13.2840. We see price just kind of move sideways-ish. We see the price oscillator bottom panel really get down to zero. It was very close earlier this morning when price was down in that 13.13 level out here. But it still can happen. And then we see a price of a test, I should say, of Stevie's red line. If price is able to close above Stevie's red line, that's back to the 13.39 level and likely beyond. Of course, we wouldn't know that until it breaks out above its descending price channel that is out here. But that's what the pattern is inside of gold right now. In summary, support has held. And that is a short-term, at least short-term bullish situation inside of gold out here. If we go take a look at the euro, let's just take a look at the euro. I think I'll look at the continuous. Did you ask for the euro? No, it was the yen. I think it was the yen. So let's take a look at the yen. Here's the daily time frame. Here's a continuous chart. If this is correct at the moment, let me do this. While that's just making sure that that chart is updating properly. But I can also here, I believe it is the M contract that is in play out here. So let me just put this up on our screen. And so when I take a look, and this is going to be better anyways right now, better read when I take a look at this chart, because what you and I had identified was that, you know what, yen futures we're struggling to clear 0.95485. It had a bearish structured box a couple of days ago. Price had gotten back inside it. That's on March 7th. And we said price is more likely not going to go test the bottom of the box. Well, that's what it's done today. And that is a level of 0.94013. Is a test to the downside over? It may be. What you know at this stage here is that level has held. So that's what the yen is doing. Yen, in essence, has tested support. I can't call it strong support, just like we could inside the weekly and a daily for gold, but we can call it support, the bottom of its profile. So that, in essence, is what is going on inside of the yen. What happens if it closes below 0.94013? Well, then it makes its move lower, and lower to where? That's a good question out here. I don't really have the answer for you. I would have to say probably around the 0.9260 level would be a place that I would be looking at. And that is your Japanese yen out here. I know we had a couple of questions that came in via email. One from Mike P. And Mike P says, hello, Steve. I say, hello, Mike. I'm buying call options on this sector. How does it look technically? SKYY. So let's go take a look at SKYY and see what it is doing. And while that's going on, let me put it on my other chart system as well. So here we take a look. This is the First Trust Cloud Computing ETF out here. So I have no idea what the holdings are. And this is an interesting sector here because volume-wise, from an ETF standpoint, there's virtually no liquidity in it, meaning 175,000, 150,000, maybe 200,000 shares, with the exception of March 6th, 9.7 million shares. I don't know what happened to March 6th out here, but with regard to market profiles for you, Mike P, you're above the daily, above the weekly, above the monthly, so that looks pretty good out there. If I pull over my other chart, I don't know what's inside this ETF out here, but it'd be worth noting the individual equities and going and taking a look at those. If we take a look at this, you're in wave number 4, so no big deal out there, although Basil will tell you that that's oftentimes where you can see some type of at least short-term change in trend. So pay attention to that. Not knowing what's inside here and the fact that it's fairly illiquid, I won't worry about trying to confirm an A to B equals CD from a volume metric standpoint, but it does look like there is an A to B equals CD, Michael, that's underway that could or should take it to 54, maybe 55, 63 or so. Those become your price targets. Everything looks good on this. Really, since February 16th, you've seen nothing but buying pressure. That last buying pressure coming yesterday. Stevie's red box out there. Support 50.32. Stevie's red line inside of this. So it really looks pretty good. So that is SKY. Add an extra one, and you'll get to that ETF out there for the First Trust Cloud Computing ETF. So best of luck inside of that trade. John writes in, please share what is on your charts for the euro. Okay, so let's go take a look at that. Let's put in 6E and M18 out here. And while that's going on, let me go take a look at the euro on my other chart as well. And so with regard to what is going on, let's take a look at it this way. So, you know what, John, let's wait till we come back from this breakout here. And that way you'll actually be able to hear what it is I'm about to say. I don't know what I'm about to say, so that gives me the break to figure it out. Dow's up, I don't know, 360, 80 points, something like that. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. You know, I mentioned the Dow was up. You know, I said, what, 350 to 380 because I couldn't see my screen out there. But it is up to 363 points. Now, what I want you to know is the average true range over the course of the last 10 days inside of the Dow is 432 points, 431.68 to be exact out here. So we'll see. Maybe this is going to close up 432 points. That's just the average true range, you know, and maybe this will do something more than average out there. So it's nothing unusual based upon the type of price movement, the average true range, that we've had during the last 10 trading sessions out here. In fact, it's below average as we speak right now. So no reason for it to not to be at least average and make a 431-point move by the end of the day's session out there. No, for John in Sarasota, we were taking a look at, or he wanted to take a look at what was going on inside of the euro. And if we just take a look at the daily chart, John, and I've got the euro futures up on my screen out here, you'll see that clearly there's a consolidation that appears to be forming. The top is very easy to identify because of that little bear sash candle on February 16th. The high there was 1.2658. It tells us where sellers are staked out. And when we just simply draw a line across the top of that, we can see that, in fact, that is the case. The bearish candle, or sorry, my apology, the bullish candle out here to really mark the bottom appears to be the March 1st level. And that's down at 1.2254. So if you look at the bottom of its daily profile, it's 1.2295. It looks to me like this is just trading with inside its consolidation out here. That's what that chart shows us. If I look at a monthly chart, this is kind of interesting. Excuse me. What we can see is, let me expand this. I really apologize for all that. Sounds nasty. But what we can see here on a longer term basis, on a monthly basis, you've got your price oscillator that is basically at the zero line. Now, when we see that occur, it tells us over the coming trading sessions, we're looking at a monthly chart, so this could be a while, that we should see over time price and Stevie's red line catch up to each other. So you're trading at 1.231, and Stevie's red line is at 1.170. those two levels are going to catch up to each other. And when they do, doesn't tell us how, but when they do, if there is a test and rejection, meaning price tests Stevie's red line, bounces off of it, then that's going to tell you we now have a rising price oscillator above zero. And that would be longer-term bullish for the euro. And that would take it back out to its highs from back in, when was this, 2014, in the 139-ish type level out there. If there's a test and there's not a rejection, in other words, price cruises right through Stevie's red line, then the move to the upside longer term would be over. So that is what the euro is doing, taking a look at both a daily chart as well as a monthly chart. So thanks for writing in. I hope that helps you out in however it is you're taking a look at trading the euro. A quick peek, and what we've got here is from Sean M., reference gold. No, you already discussed the contract. Your long-term outlook on GLD. I'm looking at way out of the money calls, December calls or later. So my long-term for gold, where is that chart? Do I have that chart? Yeah, I have that chart right here. So, Sean, my longer-term chart for gold, and it's kind of, I don't know how this works, but just like you and John and I, we're looking at the longer-term euro chart, right, monthly. That's what we're looking at now for gold. That price oscillator getting to zero, a test of Stevie's red line, is exactly what unfolded inside of gold in December of last year. And that was a test and a rejection. And that says to me, as long as price stays above 1290.40 right now, that long-term, where's it going by December 31st? I don't know. But I can tell you what my long-term is that we're going to 2,000 and higher. We're going to take out the old highs. That is longer term. You know, where's it going to head to by March? You've got to see gold close above 1377. And then you've got a longer term A to B equals C to the upside at a minimum out there. But so, and that's, you know, I'm looking at the gold contract in this case here, obviously looking at the continuous contract in order to get all this data to do the monthly. Gold priced in euros. Peter wants to know what that is doing. So far, that has not turned up to my knowledge. Let's go take a look at it. Gold priced in euros. So this is this chart here. And Sean, this really helps you out as well, because in order for gold to really get traction, you need to see gold priced in euros break above the 11.10 an ounce. Right now, if you were paying for an ounce of gold in euros, net of the premium you'd pay for the coin, you're looking at 1073, 1,073, 1,074 euros. Whereas if you go to the store in the U.S., you've got to bring with you 1,322 shekels out there. It hasn't really turned up, but you know, there's what we are starting to see is the beginning of, you know, look, we can see that gold in dollars since the low has a little bit of a rising, you know, it's got a rising price just as gold in euros does. So there's, you know, there's a little bit of hope out here. What you really like to see is gold price in both of these currencies moving to the upside. And in the case of euros, the key is going to be for you, Sean, for you, Peter, for me, Steve, for everybody out there, is going to be when gold price in euros cracks above that 1,100. And it's not exactly 11.10. It's more like exactly 11.0720. But, you know, let's not worry about just a couple of euros out there. You'd like to really see it crack it. So, you know, this chart here shows you where when divergences occur between gold price in dollars versus euros, euro is the one that wins the battle. Most people wouldn't even have thought that. Probably if we had that on a Jeopardy question, everybody except for you would have gotten it wrong. But you would have said, no, Alex. The answer would be gold priced in euros. You'd say, what is it that's the key to gold moving higher? And you would have, you know, that would have been gold for 1,000, Alex. And you would have piped in that, Alex, that'd be gold. The answer is what's gold priced in euros? And you would have been exactly right out there. But let's just keep that as a secret between you and me, and let's not tell anybody else out there. Let's just kind of keep that with inside the TFNN family out there. So that really covers everything. And, you know, with just this segment, another 30 seconds or so, and then I think just another couple of minutes out there, we will have made it through kind of a rough throat weekend out there, week. And so what else is it that I can share with you that is going to be helpful? Oh, what is it that I can share with you? Not really a whole heck of a lot out there. But I'll try to come up with something, you know, when we get back from this breakout here. So right now, Dow's up 379. You and I were looking for, what's the number? About 400 and something, $431. We're looking for the Dow to finish up 431. Just an average day's price movement for it. GDX, Danny, you can take a look at that. I'm not that fond of the GDX right now. I need to see a clear break in both gold and in silver, and it's just not there. So just expect sideways move out here inside of the GDX. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. And Danny in Atlanta was shucking oysters yesterday. As he said, YouTube can teach you a lot of things. No question about that. The internet is very cool. Now, my preference on oysters, West Coast. I like the West Coast oysters. There's a Japanese oyster. It's a Japanese name. It actually still comes from the West Coast, meaning the Seattle area. I forget. It starts with a K or something like that. But it's really deep. It's like a deep, small. The oyster is fairly small, but it's a deep oyster, real creamy, really nice out there. I mean, just beautiful. And but in any event, let's not talk oysters. The question was really platinum futures, and wanting to know, what's a daily chart tell us? I'd have to say more like what's the daily and the weekly chart telling us. So the daily chart has some promise. It has some promise in that right now, this was a brand new daily profile that formed a couple of days ago. And as we speak right now, prices trade at 963.40. That's up above 961.90. So that's really good because 961.90, as long as it closes above that today, then you've got some promise for a move higher. Now, that move higher right now is only to 970.80. The number you're really looking for to see price close above is 970.80. That's the bottom of its weekly profile. That pretty much had been resistance last couple of weeks out here. So you'd really like to see it close above that. Before you could then really start taking a look at, then you'd go ahead and on a shorter term basis buy the next retracement as an example. So that's what platinum looks like out there. In the last minute of the show, or 30 seconds, what are you going to watch for? Just make sure the spot volatility index trades closes below 1709. That's the 50-day exponential moving average. Make sure the NASDAQ composite closes above 7505.77. Yeah, otherwise, you'd have a rejection of a swing point, and then we'd have to come back and take a look and try to figure out what does that mean, if anything, out there. And that's what I'd be looking at. So have a great weekend. Thanks for putting up with my lack of energy this week out here. But you and I, and all of those remedies that you've thrown out there for me, we've beat this thing. Now it's mostly just the sniffles. So stay tuned, folks. Your favorite polar bear in mind, David White. He's up next. Tom O'Brien, 3 to 5. I'll see you on magnificent Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.